Hello everyone, this video is for those salaried employees who are more worried of paying income tax and finding ways to save the income tax amount every financial year. So, before we begin to know the top 10 options to save income tax, welcome to our channel, The Guidance Pro. Income tax slabs. In India, income tax is levied on individual taxpayers on basis of a slab system where different tax rates have been prescribed by Government of India for different slabs. Please note that Budget 2020 has announced a new tax regime giving taxpayers an option to pay taxes as per the new tax slabs from financial year 2021 onwards. Also, India's Finance Minister Nirmala Sitharaman gave taxpayers an option to choose either a new regime or stick with the old tax regime to pay taxes. So, here you can find the details of old tax regime and newly introduced tax regime. Here are the top 10 sections and their tax exemption limits which can be utilized to save the income tax under the different categories. Firstly, Section 80C. An individual can claim income tax exemption up to 1.5 lakh under this category. Section 80CCD 1B. Maximum exemption limit is 50,000 rupees under this category. Under Section 80D, depending upon the different type of health insurance taken, the maximum exemption limit varies from 25,000 to 1 lakh. Whereas Section 80EE has a maximum limit of 50,000. Section 80EEA maximum limit is 1.5 lakh under this category. The maximum limit under Section 80EEB is 1.5 lakh. Coming to Section 80E, full exemption on interest paid for the financial year. Section 24B, maximum exemption is 2 lakhs. Finally, Section 10, 13A and Section 80G, exemption under these sections are based on calculation. Now that we know top 10 income tax sections and their exemption limits, let's deep dive into each of this section in detail. Section 80C. Individuals can claim a deduction of 1.5 lakh rupees under this section by investing in policies, schemes and plans that are covered under the subsection of 80C. Eligible investments under 80C include EPF deducted by employer or investing in Public Provident Fund, life insurance premiums, principal amount of home loan, investment in National Savings Certificate (NSC), children tuition fees, fixed deposit of amount for 5 continuous years. Please note, interest received on FD is taxable income. Eligible investments under 80CCC includes mutual funds and pension plans. 80CCD1 covers National Pension System, Atal Pension Yojana, etc. 80CCD2 employers' contribution towards NPS is covered under this category. Section 80E. There is no max exemption limit and can claim full amount of the interest paid on the education loan under this category, provided the eligibility criteria to claim under this section is that 1. An education loan taken for higher studies of either self or for spouse, children or guardian only. 2. Loan sanctioned by an authorized financial institution. 3. Can only claim up to 8 years or complete payment of loan, whichever is earlier. Section 80EE and Section 80EEA. A salaried individual can claim either 80EE or 80EEA for the house loan taken. The eligibility criteria to get tax exemption of 50,000 under Section 80EE is Home loan taken should be for the first house. Cost of house should not exceed 50 lakhs. Home loan taken should not exceed 35 lakhs. The eligibility criteria to get tax exemption of 1.5 lakh under Section 80EE is: home loan taken should be for the first house. Loan sanctioned between April 1, 2019 and March 31, 2021 can only claim this benefit. Cost of house should not exceed 45 lakh rupees. Not eligible to claim under Section 80EE. Section 80G. Individual can claim exemptions under this section by contributing to authorized relief funds and charitable trusts or institutions. Depending upon the type of contribution to research, political parties, charitable trusts, etc., the percentage of claim varies provided taxpayers has to submit name, PAN number, address of the donee along with the amount contributed. Section 24B. Under this section, individual can claim an income tax deduction for the interest paid on home loan up to a max limit of 2 lakhs for the financial year, provided the property should be self-occupied, otherwise the let-out property will be considered as an additional taxable income from the house property. Section 10(13)(a). Salaried individual can claim house rent allowance (HRA) under this section, and the exempted amount is calculated based on the least amount of 1. Actual HRA received, 2. 50% of basic plus DA for those living in metro, or 40% of basic plus DA for those living in non-metro cities. 3. Actual rent paid minus 10% of basic pay plus dearness allowance. Please note, one can claim both HRA and home loan only in case if the individual house for which the home loan is taken is in one city and staying in a rented house in different city for any reason.
Thank you.